Big win for Google tonight. A federal judge says Chrome can stay. No forced breakup for Google, ripping after hours. Here's what the ruling actually does, who wins, who loses, and how it's about to affect the stock in the long term. And a beautiful quote from Google of how much has changed with AI. Saner words have not been said, but Google basically got off the hook for having to sell Chrome, right? So that was the big thing. Judge Amy, I'm not going to try butchering that last name, ruled that Google must open up for competition in online search by sharing more data with competitors, and said that the company could not enter exclusive contracts for search, but could still pay for search engine inclusion, news that could affect Apple. Again, this is because the duopoly in ad space. Google won't be forced to sell its flagship Chrome web browser in a closely watched antitrust case. So again, like we kind of mentioned before, this is a big nothing burger in the sense of it moves the needle in the direction Google wants to, but again, in any case, Google will appeal the ruling, meaning that the remedy could come many years into the future, arguing that giving data to competitors would open the possibility of reconstructing or reverse engineering their technology, leading to be anti-competitive. And the stock, well, the stock simply did one simple thing. To the moon we go. And leading by example of what NVIDIA should have done. But again, we're not going to digress down that rabbit hole. Now, the natural question everyone's going to be asking is Google too expensive to buy right now? Again, considering this is a blue sky breakout all-time high, how would you play this, right? Again, it was holding pretty strong today, and Google was showing strength. Again, we've done discounted free cash flows on this company extensively. And here's the meat and potatoes, what you all guys are here for is, do I buy Google now? Do I wait? Did I miss the boat, right? That's the meat and potatoes question that you're trying to answer. Personally, I would be buying Google at any share price here for the sole reason that it's an absolute juggernaut. This case has been weighing on Google for quite some time. Even though it's basically an earning style breakout, this company is absolutely undervalued for where it's at now. If we go to the stock heat map and we go to the 1 year performance, right, year to date performance, well, it's only up 10%. And that's pretty minimalistic for a tech company. It's going to be 16% when you guys are seeing this. But again, Google's 20, 30, 40% years. Like, this is really, 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 really sad, for lack of a better term. And NVIDIA doing 25% this year, even though of their bumpy ride that they've been going on now. So when you compare the two, Google is actually really, really cheap. Same with Meta, 25%. I've been telling you Meta is really, really cheap. And again, it's looking more and more like this. Google showing an insane amount of strength. Now, the way I would play it particularly, I'll wait for the candle close on the day, kind of see where it forms this bottom, where this gap kind of region is going to be. See, give it maybe 2 or 3 days to see if it's going to basically expand upward or kind of trickle down like we sometimes see. We sometimes see a gap to the upside, and then we kind of trickle down over the next couple days, and leading to maybe like a median price about like 220, because that's a psychological number also, or 216, right? Like these nice round sounding numbers. However, again, these are just random numbers where Google doesn't have to go to it. Right now it's 226. 220 would be a psychological number if you want to put a bid down there. But again, anything more than 220 is basically gravy train for me. And I own Google personally. I've openly said that I'd be buying more Google. I will be dollar cost averaging up with this latest move. I bought Google around 185 a share. Right now it's 226. So I'm pretty darn happy with the performance that it's been doing. But again, this is blue sky breakout, right? This is a massive, essentially, cup and handle on Google that kind of form right here, which leads me to the next thing of that Google is going to do some insane stuff, right? So if we look, say this is the cup and handle, that projects Google up to like about 270, right? So you're going to get $50 just off this symmetric move that's about to occur right here. And everyone's like, well, when is it going to occur? When's it going to, well, it's starting right now. And this is going to put a lot of fuel and a lot of kind of quell some of the bearishness that's going on in the market. Now, if you guys were curious what's going on in the market, well, Donald Trump stirred the pot pretty darn hard today. And that really affected semiconductors. US pulls TMC's waiver for Chinese shipments of chip supplies. Essentially what this means, you have TSMC that's in Taiwan. It is sending materials to its Chinese manufacturers where they're building chips for China. This is leading to the US basically saying, no, you can't do this anymore, kind of in line with the H20 chips and also geopolitical tensions where China is trying to get independent of US manufacturing for chips. So it's this kind of dual polar pulling that's leading markets to have uncertainty, and then also throwing in the tariff ruling where everyone's saying, oh, you're going to have to pay all this debt back again. It's going to get appealed. It's going to go to the Supreme Court. It's going to go absolutely nothing. But it was an amazing buying opportunity for the markets, and they dipped nicely. When I mean nicely, we came down, broke the weekly lower level, but I would like to point out that we had a hollow candle. That means the expansion is continuing. We didn't even come down to the 50-day moving average on the S&P. Now the question is, with this latest news of Google, S&P being up post-market right at the war line for the weekly breakdown, if we actually close above 641.57 today, that would signify a full bull rotation. We're coming for 650, we're breaking 650, and we're heading to break the backs of the bears. Subsequently, the NASDAQ came down to the 50-day moving average, haven't touched that in a while, and is looking again challenging that weekly rotation of 568.54, leading to the question, if we hold above it, are we basically going to break through 590? And to the moon we go. We can see the Russell as well, kind of having not even a full weekly breakdown. So small caps are holding up the broader market, leading to the conclusion that this is just a fake out for the bulls. Then we're faking the bulls out. We're going to load up short with the bears, and then we're going to cream them afterwards. Also, fear and greed didn't even tick down much today. 62, previous close 64. That's absolutely nothing considering all the bearish news that's been going out. They heading into payrolls, so everyone's positioning, right? All the bad news has already happened for payrolls, where we're going to get the net spec 187,000. That's short squeeze territory. They're going all in on this, and we're going to get payrolls 74,000 expected. Manufacturing payrolls don't have expectations yet, or neither for private. 83, probably going to be around 80 or even 75 is where I would be betting on that. But when you guys are seeing this video, you would actually also see the Jolt Jobber openings. This will be an early warning sign of where the economy is going. They're expecting 2.390. Where does the openings come in? Do they shrink significantly below 7 million, or which would be extremely bearish, or does it head to a higher number, 2.5 million, leading to the question of a stable job market and how that plays into rate cuts? Because rate cuts right now expected in December are 2 rate cuts. So we're not giving the super rosy scenario. And what if we get some data that supports a 3rd rate cut? How the market is going to react. Make sure you guys are subscribed so you know when videos like this come out and more content like it. And also, if you guys wouldn't mind checking out the Weekend Deep Dive video, it'll be linked at the end of the description for you all to enjoy and the end of this video. But we can turn to Bitcoin to kind of know what things are going to be going on. And it's very, very simple. Bitcoin is not crashing. We're looking like we're about to pull up. Bitcoin about to cross 116, leading to the question is, are we going to reclaim all-time highs? And is the market going to continue ripping? Even though September is one of the worst months for the stock market historically performance, that doesn't necessarily mean you got to get it, right? If we look at the performance for September, if this is the low, right? We just established the low on the week and just keep piling up higher, that would be a beautiful short squeeze ending in a culmination of an amazing Santa Claus rally. Again, companies like Amazon have just absolutely been creamed down to the 50-day moving average. You got Microsoft even below the 50-day moving average, looking to retake it for quite some time. Meta, again, similar story, gap below the 50-day moving average, reclaim. All these things are setting up to be extremely bullish. They can be, they don't necessarily have to be, but these are where the buying opportunities are made. All these companies I called out in the Weekend Deep Dive, and you guys could have picked them up for dirt cheap today. Again, fair warning, AVGO earnings looking like this is bull flagging out. Probably going to be a 380 run after earnings for it. So make sure you guys check that out. We're going to be streaming AVGO when earnings come out and doing a stream probably on Thursday. So make sure you guys are subscribed for that. And thank you all so much for watching, and I hope this was very informative. Check out the latest 2 videos we posted on the bottom left here, along with our Discord channel on the top left as well. Thank you all so much for watching, and I'll see you in the next one.